first of all, the reason why you see precious metals go down along with the price of stocks is because people need to come up with cash to meet margin calls. So, and those are all contracts. That's not necessarily, as you can attest to, about the physical market. And if you wait until you think there is a bottom that is near for the falling stock market, you're not going to be able to get any gold because central banks are accumulating gold like crazy. Smart money is accumulating gold like crazy. And unlike stocks or bonds or ETFs or, dare I say it, any other intangible instrument, financial instrument, of which there is an infinite amount, when you get to physical gold and silver, or anything physical for that matter, there is a finite amount. So do not wait. Look at the insanity that is happening. And you know, China's real estate market has begun to drop for the first time, I think they said in, was it 15 months or 15 years? Something like that. You know, I pulled it this morning. I haven't really read all about it yet. Well, that would be, and they were talking about how important it was to keep the real estate market up, and that China is attempting a controlled implosion or a controlled decline because it makes up so much of their GDP. Everything that they said on that was exactly true for everywhere else in the world. So they've got to keep the stock market inflated because that's what people look at. They have to keep the real estate market inflated because not only do people, you know, if your house goes up nominally, right, in value, then you think that you have more equity. That it's same thing with the stock market. Look at this, it's gone up. Okay, I have more money. The piece that everybody seems to miss is that it doesn't matter how much money you have. It matters what you can do with it. It matters what you can buy with it. It's that purchasing power. And that is going down at a faster rate officially than I've ever seen in my career, frankly. And I've been watching currencies and currency life cycles since 1987. As you know, I just keep accumulating.
Yeah.
Right? You just keep accumulating.
Yeah.
You don't really care about the price. I don't care. Because I know it's not real anyway. And we just did a reset calculation if they did it at 100%, right? And you came up with something like, what, 52,000 an ounce or something like that?
52 or I want to say it was 68. But
yeah, it was something like that. I mean, it could be a quadrillion. It doesn't matter. Because when that happens, you do not want fiat. At that point, everybody knows how much value that currency is actually losing. So you're only going to want to convert it into that currency if you need it for a heartbeat to buy something else, income producing assets, or pay a medical bill, or pay a property tax, or something that you're not going to keep it in fiat. It has never been more critical for people to be aware of what's going on with everything that's happening out there. Well, the goal is that by using the funds that are your account, that makes them solvent again. Now, it's a failing institution, so what they did to get into that position, does anybody ever seem to change their behavior? That would be a no. And a lot of times you'll have different bank takeovers. But so the bank is insolvent. That's why they took your funds to begin with. If there isn't enough funds there, then they would remain insolvent. But by taking your funds, then they're saying they're solvent again.
Okay.
And you get shares in that failing institution. Mortgages are a contract, right? And so they're not like a variable rate mortgage, like a variable rate mortgage or a credit card where they can modify the interest rates just like that. So part of it is deeper than stagflation because your income will never keep up with the level of inflation. And so even if you put your house over here for a minute, but you've got to buy food and energy and all of the other things that you need to live, water, etc., then you could have a lot of problems paying your mortgage. Now, as we saw in 2008, 2008 was kind of like a mini of what we're going to deal with. And so all of those people got into financial hardship not everybody, but a lot of people got into financial hardship, and they couldn't maintain the houses. The houses were more than they could afford. And so then they went in for loan modifications, which I think probably a lot of those notes went out recently during the Cerveza issue that we've been dealing with too. They sent me a loan modification, so I think that just went out like a blanket kind of thing. So part of it is that you want to make sure that you don't have to be in a circumstance to do that loan modification, because it will not be in your best interest, right? So that is one reason why you really need to have the funds to pay it off immediately, and not with fiat, but with gold, because then you're paying it off with dollars that have virtually no value, and there may only be a slight window in which you can do that. Now, as far as B is concerned, because we are going into a completely new currency and a digital currency, that also could be the issue. Yesterday, I had this conversation with Egon von Greers, and he made a really interesting statement that I hadn't even really thought about before, but it makes a whole lot of sense, and it's applicable to B. Egon feels that they will take all of the debt that is denominated in the old dollars and put it over here, and then try and start clean with the debt denominated in the new CBDCs, or the new digital currencies. That won't fix the problem. Do not think for even 1 second that once the government comes out or the central banks come out with a CBDC, that's the reset. It's not. Just keep that in your mind. But that would certainly be a very good reason for, after they reset the currency, that would be a great excuse to rewrite the loans that do exist, even if A isn't applicable. That would be an absolutely stellar reason. So you want to pay that off before you're caught in that trap, 100%. And part of the strategy is to do it with gold.